Hey there, welcome back. Today we're taking a deep dive into the real estate market. It's a topic that's always buzzing, but, deciphering all the signals can feel like trying to read tea leaves sometimes, right? We've got a stack of research articles and insights, and we're going to boil it all down to the essentials for you. It's not just about understanding what's happening right now, it's about anticipating what might be around the corner. And to help us with that, we've got an expert joining us today, someone who can really unpack these complex trends and help us kind of make sense of it all.
Yeah, happy to be here. The real estate market is fascinating because it's constantly evolving,
Hmm.
influenced by so many factors from economic shifts and policy changes to even just like societal trends.
Okay, so let's start with those trends you mentioned. What are some of the big picture things happening in real estate right now?
Well, one of the most prominent trends is the ongoing impact of rising interest rates. As rates climb, borrowing becomes more expensive, which directly affects affordability for both buyers and developers. This has a ripple effect on demand and ultimately on property values. Another key trend is the persistent issue of housing supply, particularly in certain high-demand areas. When supply struggles to keep pace with demand, it puts upward pressure on prices, making it challenging for buyers to enter the market.
Okay, so navigating this market requires understanding these bigger forces at play. And I know there's this common misconception that real estate always goes up in value. Can we debunk that myth right now?
Absolutely. While history shows that real estate is generally appreciated over the long term, it's not a guaranteed upward trajectory. Think of it less like a rocket ship and more like a sailboat.
Hmm.
There are going to be ups and downs, periods of rapid growth, followed by periods of stagnation or even correction.
So more like sailing through unpredictable waters, where you need to be prepared for different conditions. And I imagine that's where understanding things like cap rates comes in. What exactly are those, and why are they important for anyone interested in real estate, whether buying or selling?
Cap rates are essentially a way to measure the potential return on a real estate investment,
Yeah.
specifically for income-generating properties. It's a ratio that compares the net income a property generates to its market value. For example, if a property is valued at $1 million and generates $50,000 in net operating income per year, the cap rate would be 5%. This helps investors compare different properties and assess potential profitability. But remember, cap rates are just one piece of the puzzle. You also need to factor in things like property condition, location, and market trends.
So a higher cap rate might signal a better potential return, but it could also indicate higher risk, right? It's about balancing the potential upside with your own investment goals and risk tolerance. And it's not just about crunching numbers, there's also the human element. How do government regulations and policies shape the real estate landscape?
Government policies have a huge impact. Think about zoning laws. They determine what types of buildings can be constructed in certain areas, shaping the character of neighborhoods and influencing property values. Building codes ensure safety and quality, but can also impact construction costs. Tax incentives can encourage development in specific areas. And policies aimed at increasing affordable housing options can have a significant impact on the market dynamics.
Can you give us a real world example of how a policy change might affect things?
Absolutely. Imagine a city decides to relax zoning regulations to allow for higher density development near public transportation hubs. This could lead to a surge in the construction of apartments and condos, potentially increasing housing supply, easing pressure on prices, and making those areas more desirable for residents who want easy access to transit. On the flip side, a policy that restricts short-term rentals could impact investors who rely on platforms like Airbnb for income, and potentially even affect tourism in certain areas. So it's always a balancing act, and understanding the potential consequences of these policy decisions is crucial for anyone involved in real estate.
Okay, that makes sense. Policy changes are like ripples in the water, they can have far reaching effects. Speaking of ripples, let's talk about something that's shaken up the entire world, and the real estate market in particular, the pandemic. How has it reshaped the commercial real estate sector?
The pandemic accelerated trends that were already underway. For instance, remote work became the norm for many businesses, leading to a decline in demand for traditional office space. We've seen companies downsize their offices or even move to fully remote models, leaving landlords to rethink the future of these spaces. This shift has also fueled the growth of co-working spaces, which offer flexible and collaborative work environments that cater to a more mobile workforce.
So it's almost like we're seeing a reinvention of the office landscape. And what about retail spaces? Has the pandemic accelerated the shift towards online shopping even further?
Without a doubt, e-commerce was already on the rise, but the pandemic pushed it into overdrive. Consumers became even more accustomed to the convenience of online shopping, leading to a surge in demand for logistics and warehousing facilities. On the other hand, many brick-and-mortar retailers struggled to adapt, resulting in store closures and vacancies in traditional shopping malls.
It sounds like the pandemic has been a real catalyst for change, pushing certain sectors forward while leaving others scrambling to adapt. Okay, so all of this information is fascinating, but I'm sure our listeners thinking, what does this actually mean for me? What are some key things to watch out for if I'm considering entering the real estate market right now?
That's a great question. And the answer depends partly on whether you're looking to buy, sell, or invest. But some universal advice is to understand your local market conditions. Don't just rely on national trends. What's happening in your specific city or neighborhood can be very different. Pay attention to things like inventory levels, median home prices, and the pace of sales. If inventory is low and prices are rising rapidly, it could signal a seller's market, meaning you'll likely face more competition and potentially higher prices. Conversely, if inventory is high and prices are stable or declining, it could be a buyer's market, giving you more negotiating power.
So it's like checking the local weather forecast before you set sail. Knowing the conditions helps you prepare and make informed decisions. Now, I know a lot of people are curious about investment opportunities. What are some things to consider if you're looking to invest in real estate?
One important thing to remember is that real estate is a long-term investment. Don't get caught up in short-term market fluctuations or try to time the market perfectly. Instead, focus on finding properties that meet your investment goals, whether it's generating rental income, holding for long-term appreciation, or a combination of both. Diversifying your portfolio across different property types and geographic locations can also help mitigate risk.
Diversification, like not putting all your eggs in one basket,
Yeah.
makes sense. And before we move on, I want to touch on a specific data point that often comes up in real estate discussions: housing inventory. Why is this metric so important for both buyers and sellers?
Housing inventory is simply the number of homes available for sale at any given time. It's a key indicator of supply and demand dynamics in the market. When inventory is low, it means there are more buyers competing for fewer properties, often leading to bidding wars and pushing prices up. This is the seller's market, where sellers have more leverage. On the other hand, when inventory is high, buyers have more choices and more time to make decisions, potentially giving them more negotiating power. This is a buyer's market. Keeping an eye on housing inventory trends can give you a sense of the market's temperature and help you adjust your strategy accordingly.
So low inventory typically means higher prices and more competition, while high inventory might mean more negotiating power for buyers. It's like the seesaw, right?
Exactly. And understanding which side of the seesaw the market is leaning towards can be incredibly helpful for both buyers and sellers. And while we're talking about market dynamics, let's delve a little deeper into this concept of market cycles. Real estate doesn't just go up in a straight line. There are these periods of growth and slowdown and even correction. And understanding these cycles can help you make more informed decisions.
It's like the tide ebbing and flowing, right? So how can our listener ride those waves effectively instead of getting swept away?
Well, think of it this way. There's essentially 4 phases in a market cycle. You got expansion, peak, contraction, and trough. During the expansion phase, we see strong economic growth, job creation, and increasing demand for housing. Prices tend to rise, and it's generally a good time to be a seller. As the market reaches its peak, demand starts to cool off and price growth slows down. This is a time to be cautious, as the market could be poised for a downturn.
So it's like being aware of those subtle shifts in the wind when you're sailing right, knowing when to adjust your sails to stay on course.
Exactly. And then comes the contraction phase. This is characterized by slower economic growth, job losses, and declining demand for housing. Prices may start to fall, and it can be a challenging time for sellers. Finally, we have the trough, which is the bottom of the cycle. Demand is at its lowest, and prices may have bottomed out. This can be a good time for buyers to enter the market, as prices are likely to start rising again as the cycle begins anew.
So recognizing where we are in the current cycle is like having a compass, helping you navigate the ups and downs. And I know this is on a lot of people's minds right now, especially with the recent fluctuations in the market. Are we headed for another housing bubble?
Oh, bubble talk is always tricky, because it's hard to predict with certainty until after the fact. However, there are key differences between the current market and the one leading up to the 2008 crisis. Back then, lending standards were incredibly loose, and there was a lot of speculation driving prices up. Today, lending practices are much more stringent, and we're not seeing the same level of risky lending or speculative buying. That said, it's essential to be aware of potential risks. Rapid price appreciation in certain markets can raise concerns about affordability and sustainability. It's crucial to do your research, understand the underlying fundamentals of the market, and not get caught up in the hype.
So, caution and careful analysis are key, even when the market seems to be booming. Now, I know a lot of our listeners are looking for tangible advice, something they can apply to their own real estate journey. What are some concrete examples of things people should be doing to make smart real estate decisions, whether they're buying their first home or looking to invest?
Sure. Let's start with buying a home. The first step is to get your finances in order. Figure out how much you can afford to spend and get pre-approved for a mortgage. This will give you a clear idea of your buying power and make the process smoother when you find a property you love.
So, it's like having your financial ship in order before you set sail, right? Making sure you have enough fuel to reach your destination.
Precisely. Once you have your finances sorted, the next step is to define your needs and wants. What are your must-haves in a home? How many bedrooms do you need? What type of neighborhood are you looking for? Think about your lifestyle and long-term goals. Are you planning to start a family? Do you need a home office? Prioritizing your needs will help you narrow down your search and avoid wasting time on properties that aren't a good fit.
So, it's about having a clear vision of your dream home before you start house hunting. And I imagine location is a huge factor, right?
Absolutely. Location is paramount in real estate. Consider things like proximity to work, schools, amenities, and transportation. Research different neighborhoods and think about what's important to you. Do you want to be in a bustling urban area with easy access to restaurants and entertainment? Or do you prefer a quieter, more suburban setting with more space and greenery?
It's almost like choosing the right port to dock your ship in, right? A place that suits your lifestyle and needs.
That's a great analogy. Once you've identified a few neighborhoods you like, start attending open houses and working with a real estate agent who knows the area well. They can help you navigate the market, find properties that meet your criteria, and negotiate the best possible price.
So, finding a good real estate agent is like having an experienced captain to guide you through the sometimes choppy waters of buying a home. Now, let's shift gears and talk about investing in real estate. What are some key considerations for those who are looking to build wealth through property?
One of the first things to think about is your investment strategy. Are you looking for cash flow appreciation or a combination of both? Cash flow investors focus on generating rental income, while appreciation investors aim to buy properties that will increase in value over time. Your strategy will determine the types of properties you target and the neighborhoods you invest in.
It's like choosing a destination for your investment voyage, right? Knowing whether you're seeking a steady stream of income or long-term growth.
Exactly. If you're looking for cash flow, you might consider investing in rental properties in areas with high demand from renters. This could include student housing in your diversities properties in desirable neighborhoods with low vacancy rates, or even vacation rentals in popular tourist destinations. If appreciation is your goal, you might focus on up-and-coming neighborhoods with strong growth potential, areas undergoing revitalization, or properties that you can add value to through renovations or improvements.
So it's about identifying those hidden gems, those properties with the potential to shine. Now let's get back to the idea of market cycles. How can investors use their understanding of these cycles to make more strategic decisions?
As we discussed earlier, market cycles go through periods of expansion, peak, contraction, and trough. Understanding where we are in the current cycle can help you identify opportunities and mitigate risks. For example, during a market expansion, prices are rising and demand is strong. This can be a good time to buy if you're confident in the long-term growth potential of the market, but be aware that prices might be inflated. During a contraction, prices may be falling and there might be less competition. This could be a good time to find bargains if you have a long-term investment horizon and can weather any short-term fluctuations.
So it's all about being aware of the market's rhythm, knowing when to ride the waves and when to wait for calmer seas. Now, I know a lot of investors are interested in specific markets. What are some areas that are catching your eye right now?
Of course, it's important to conduct your own due diligence, but here are a few markets that are worth keeping an eye on. The Sun Belt region continues to experience strong population growth and job creation, leading to increased demand for housing. Cities like Austin, Nashville, and Phoenix have seen significant price appreciation in recent years. Some mid-sized cities offer a balance of affordability and quality of life, making them attractive to both residents and investors. Places like Boise, Idaho, and Des Moines, Iowa have seen strong economic growth and rising property values. College towns can provide steady rental income, especially if you invest in student housing. Look for universities with growing enrollment and strong reputations. And emerging markets, often in the early stages of revitalization, can offer opportunities for significant appreciation. but they also come with higher risk.
So it sounds like diversifying your real estate portfolio across different regions could be a smart move, spreading your risk and potentially maximizing your returns. Now, I want to touch on something that can be a bit of a head scratcher for people new to real estate investing: cap rates. Can you give us a quick refresher on what cap rates are and why they matter?
Certainly, a cap rate or capitalization rate is a metric used to estimate the potential rate of return on a real estate investment property. It's calculated by dividing the property's net operating income by its market value. For example, if a property generates $10,000 in net operating income per year and has a market value of $100,000, its cap rate would be 10%. Generally, higher cap rates indicate higher potential returns, but they can also signal higher risk. Factors like location, property type, and market conditions can influence cap rates.
So it's a way to quickly assess the income generating potential of a property,
Yeah.
but it's just one piece of the puzzle. Now, I know a lot of people are curious about how to actually find investment properties. What are some tips for uncovering those hidden gems?
Here are a few strategies. Network with other real estate investors, agents, and professionals. Attend industry events, join online forums, and build relationships with people in the know. Look for off-market properties. These are properties that aren't publicly listed for sale, but might be available if you know where to look. Consider distressed properties. These are properties that are in need of repair or facing financial difficulties. You might be able to acquire them at a discount and add value through renovations. And work with a real estate agent who specializes in investment properties. They can help you identify opportunities, analyze deals, and negotiate on your behalf.
It sounds like finding those hidden gems requires a combination of research, networking, and a bit of creativity. And one last thing I want to touch on before we wrap up, part two, is the importance of due diligence. What are some key things investors should be looking for when evaluating a potential property?
Due diligence is crucial when investing in real estate. It involves thoroughly examining a property to assess its financial viability, physical condition, and legal status. Here are some key areas to focus on. Review financial statements. Analyze the property's income and expenses to determine its profitability. Inspect the property carefully. Look for any signs of damage, deferred maintenance, or potential problems. Research the neighborhood. Consider factors like crime rates, school quality, and proximity to amenities. Obtain a professional appraisal. Get an independent assessment of the property's market value, and order a title search. Make sure there are no liens or encumbrances on the property.
So due diligence is like inspecting your ship before you set sail, making sure it's seaworthy and ready for the journey ahead.
That's a great way to put it. It's about minimizing risks and making informed decisions based on solid information.
So we've covered a lot of ground, from market trends and cycles to investment strategies and due diligence. And it's clear that knowledge is power in the real estate world. But I think it's also important to remember that real estate is about more than just numbers and transactions, right? It's about people's lives, their dreams, and their communities.
Absolutely. Real estate is fundamentally about creating spaces where people live, work, and connect. It shapes the fabric of our cities and neighborhoods, and it plays a vital role in our economy and society.
I love that perspective. It's not just about buying and selling properties. It's about building communities and creating spaces that enhance people's lives. And to kind of illustrate that point, let's dive into a real-world case study that showcases how real estate can be a force for positive change.
Okay.
So imagine a former industrial area on the outskirts of a city. It's a bit run down with empty warehouses and vacant lots, but there's potential there. A sense of history and character that could be revitalized.
Like a hidden gem waiting to be polished, right? A diamond in the rough. Now a group of developers comes along with a vision. They see the potential of this area to become a thriving mixed-use development, a place where people can live, work, and play. They imagine a vibrant community with apartments, shops, restaurants, green spaces, and maybe even a community center or a cultural venue.
So it's about transforming a forgotten space into a dynamic hub, a place where people can connect and thrive. But I imagine there are a lot of challenges involved in bringing such a vision to life.
Oh, there are always challenges in real estate development, especially when you're dealing with a large-scale project like this. The developers need to navigate zoning regulations, secure financing, address environmental concerns, and engage with the local community to ensure their plans align with the needs and desires of the residents.
It sounds like a complex dance, balancing the interests of developers, investors, residents, and the city as a whole.
It is, and the success of such a project depends on a delicate balance of all these factors. If done right, it can be a win-win for everyone involved. The developers create a successful development that generates income and enhances the value of the surrounding area. The city benefits from increased tax revenue job creation and a revitalized neighborhood. And the residents gain access to new amenities, improved infrastructure, and a more vibrant community.
It's a great example of how real estate can be a catalyst for positive change, not just for individuals, but for entire communities. And it highlights the importance of collaboration vision and a commitment to creating spaces that benefit everyone.
Precisely. And as we wrap up this deep dive into the real estate world, I think that's a key takeaway for our listener. Whether you're buying your first home, investing in rental properties, or simply curious about the market, remember that real estate is about more than just bricks and mortar. It's about people, communities, and the future of our cities and towns.
That's a fantastic point to end on. Real estate is a powerful force that shapes our lives in countless ways. So as you navigate this complex and ever-evolving market, remember to keep that broader perspective in mind. Think about the impact your decisions will have on your own life, on the lives of others, and on the communities you're a part of.
And never stop learning. The real estate market is constantly changing. So stay informed, seek out expert advice, and continue to deepen your understanding of this fascinating and dynamic world.
That's great advice. Knowledge, as they say, is the key to unlocking the doors of opportunity. And to our listener, we hope this deep dive has equipped you with the insights and information you need to navigate the real estate world with confidence and make decisions that align with your goals and values. Thanks for joining us on this journey.
It's been a pleasure.
Until next time, happy sailing.